Hey everyone, and welcome. Today we're going to put on our lab coats and do a full technical checkup on a stock that, everyone is watching, Tesla. We're going to break down what it's been doing lately, check all its vital signs, and see if we can figure out what's really going on. So, let's get this checkup started.
So it all boils down to this one big question, right? Is Tesla's stock, is it actually healthy right now? And look, just to be super clear, this isn't financial advice. Not at all. Think of this more like we're taking this stock to the doctor's office. We're just here to check its pulse, run some tests, and assess its current condition. We're definitely not trying to predict the future with some crystal ball.
Okay, so you know how any good doctor's visit starts, right? They always ask about your recent history. So that's exactly where we're going to start. We'll take a look at the big picture symptoms first, just to get a feel for the patient's overall condition before we dive in and start running the more specific tests. So, here's our patient for today, Tesla. As of the market close on October 10, 2025, its price was sitting at $413.49. Think of this as our baseline. It's that first vital sign we take right when the patient walks in the door.
But of course, that one number doesn't even begin to tell the whole story. I mean, this patient has had a wild couple of months. We're talking lows down around 273 and highs all the way up near 471. And get this, just in the last day, it dropped over 20 bucks. These are some pretty big swings, you know? It's showing some real signs of instability, which means we definitely need to take a closer look.
So here's our initial health report. And honestly, it's kind of fascinating. It's a bit of a paradox, actually. See, long-term, the trend is totally bullish. The stock is trading way above its key long-term averages, which is a fantastic sign of underlying health. But in the short term, it's showing some real weakness, pulling back from those recent highs. It's kind of like a marathon runner who's in amazing shape, but, just showed up to the clinic with a nasty cough. Something's up.
All right, so to figure out what's causing that cough, we've got to do what any doctor would do next. We need to check the vital signs. This is where we start using some specific technical indicators to really see what's happening under the surface. Time to break out the toolkit.
First up, let's check the pulse. And we're going to do that using something called moving averages. It's actually a pretty simple idea. It's just the average price of the stock over a set period of time, say 5 days or 50 days. What it does is it smooths out all that day-to-day noise and helps us find the stock's real underlying rhythm, its baseline pulse, if you will.
And right away, this perfectly shows that conflict we were talking about. The short-term pulse, looking at the 5-day and 10-day averages, it's weak. The price is currently below those averages, which is kind of like the patient having a slight fever. But then you look at the long-term pulse, the 50-day and 200-day averages, and it is strong and steady. The price is way above those, which points to really good long-term cardiovascular health.
Okay, next up, let's take the patient's temperature. For this, we use a tool called the RSI, which stands for Relative Strength Index. Just think of it like a momentum meter. It tells us if a stock is running a little too hot, what traders call overbought, or maybe a little too cold, which they'd call oversold.
So what's Tesla's temperature? Well, the reading comes in at 50.02. And on that scale from 0 to 100, that is perfectly normal. Right smack in the middle. It's not running hot, so it's not overbought, and it's not running cold, so it's not oversold. So this tells us that even with that recent drop in price, the momentum is actually pretty balanced right now. So, hey, no fever to report here.
Okay, so let's run one more test here. This one uses a tool with a fancy name, the stochastic oscillator. But don't worry about the name, just think of it as a fatigue meter. It's really good at telling us if the stock has been pushed down too far, too fast. If it's getting exhausted and might be due for a rest or even a recovery. And wow, our fatigue meter is flashing a pretty clear signal here. This indicator, the stochastic oscillator, and another similar one called Williams R, they're both screaming that the stock is in oversold territory. It's exactly like a runner who just sprinted full speed down a hill and is now totally out of breath. That recent drop was fast, and it was significant.
All right, we've checked all the vitals. Now it's time to put all of these pieces together. We're going to read the charts and combine all this data into one clear, cohesive diagnosis of what's really going on with Tesla right now.
Now, to do that, we have to talk about two absolutely critical concepts, support and resistance. Just think of it this way. Support is like a price floor, a level where buyers usually show up and start buying. And resistance is the ceiling, a level where sellers tend to show up and take control. For our patient, these are the most important pressure points we need to be watching. Okay, and this chart just lays out the current situation perfectly. You've got the immediate support floor down there around 407. The resistance ceiling is way up at 434. And where's the current price? 413.
It's literally sitting just a few steps away from that support floor.
And this leads us right to a key takeaway from the analysis, which pretty much confirms exactly what we're seeing on that chart. Quote, the stock is closer to the immediate support than resistance, suggesting a potential for further downside in the short term. I mean, to put it simply, the risk of falling through that floor seems a lot more immediate than the chance of it blasting through the ceiling right now.
Okay, so we have our diagnosis. Now we can move on to the final part of our checkup, the prognosis. Based on everything we've seen so far, what are the likely scenarios, the possible paths forward for our patient from here?
Well, first, we got to understand its volatility fever. There's a metric for this called the average true range, or ATR, and right now it's at about $19.24. What that means is, on any given day, you could reasonably expect a price swing of about $19, up or down. So yeah, this patient is definitely still prone to some pretty big moves.
So this really lays out the two main possibilities, the treatment plans, if you will. The bullish scenario, the path to recovery, is this. If the price can hold on and stay above that critical 407 support floor, it could absolutely bounce back up towards those higher resistance levels. But there's the bearish scenario. If the price breaks below that 407 support, well, the next major line of defense isn't until you get all the way down to around 389.
So if there's one thing to take away from all this, it's this. Watch that 407.81 level. That specific number is what's known as the lower Bollinger Band, which often acts like a moving floor for the price. Right now, it is the key line of defense. Pretty much everything in the short term hinges on whether or not buyers can step up and hold that line.
And that leaves us with one final big question. Our whole checkup shows a patient that seems really healthy in the long run, but right now, it's showing clear signs of short-term fatigue. And it's sitting dangerously close to that critical support level. So what is this? Is this a moment of genuine weakness, or is this just a calm before another massive surge? That's the billion-dollar question that the market is about to answer for us.